buying insurance is a latent need. Most people postpone this in their lives and don't think that it's an important decision early on in their lives.
I would imagine this to be very similar to how a big basket or a Lenskart process the order, and after that they ask for, so the order is confirmed. Now you can pay in whatever fashion in big basket, and the order is confirmed on a Lenskart, and you can now put your power afterwards.
Actually, the reality in India is a lot of people have insurance plans which they don't know what
because
they
it's
do
from the employer or whatever.
Yeah, so either they would have bought it as part of it was mandatory to along with the home loan, or let's say some family member recommended that you take this LIC plan. So they would have a couple of policies, but they wouldn't know what they do for them.
Besides, I have a strong relationship with the brand I'm buying insurance from, so I'm okay to retain that app on my phone and kind of watch it every once.
Correct.
But what are the use cases except renewal payments? This is just once a year. This is the constant battle, right? Because would you rather have higher quality leads which have an intent which is clear, or would you have a whole bunch of people who just intend to check quotes because you're spending money across the whole funnel for each of these? Every single call costs money, right?
User engagement and retention is a crucial but least understood aspect of growing a successful business. We are here to change that. Hi, this is Ankur. Join me as I dive into conversation with the best and brightest minds in user engagement to help you navigate the why, what, and how of this subject.
Hi, good morning. Welcome to one more episode of the State of Retention Marketing podcast. Here with me today is Samir. Spent a meaningful amount of time in the industry, lately with Max Life Insurance. But before that, he's done a lot of good work with Shopclues and Make My Trip. Samir, thank you for doing this and welcome on board.
My pleasure.
So, maybe let's have you do the introduction for yourself in terms of your journey and what's got you to the point where you are.
It's been a long career. I've moved industries, I've moved roles. I started as a techie. I was a software developer with Infosys and Oracle early part of my career. Then after MBA, I did sales category roles, and then moved on to digital when I was in Make My Trip. I've been in various functions. I've done on-site marketing. I've done customer engagement. I've set up digital analytics for organizations, and then acquisition and engagement at Max Life. Now I've actually
engineering to sales to category to this. Quite a diverse view.
Yes. In the last 1.5 to 2 years, I have now moved from a head of digital to managing P&L for our website business, and it's been a very fulfilling journey for me.
Very interesting. So, Sumir, the website would be a fairly dominant part of your attention span at the company level as well by now, I would imagine?
Yes. We've figured out that almost if we're doing 100 rupees of agency business, which is the larger part of our business, 10 out of those customers visit our website before they actually buy offline.
Wow.
So it's not just the might of the online business that we have. Website is like the storefront for the larger organization. So
sure. So this is also translating into uplift in your other parts of the business. While there's direct business here, there is also indirect influence on the other parts of the business.
Yes.
Very cool. So insurance has become a relatively competitive space now, in my impression, and there is a lot of, let's say, aggregator play that's also playing out, which is, I'm assuming, driving a part of the business. So in your case, what does the play look like in terms of acquisition? How aggressive do you go? How competitively do you play? What kind of market share do you probably claim? And what are the different products within insurance that you are expecting to focus on or sharpening your spends on?
Okay, so yes, you were right in mentioning that aggregators have changed the space completely, and that's when online business started growing significantly. Term insurance was the dominant product for the longest time because it was a vanilla product, easily understood by consumers. It didn't have many hidden clauses, for which you need somebody face-to-face explaining the nuances of the product, and hence that was the dominant product for the longest time. But now there are savings-led insurance products that have now started picking up. Two dominant categories: one where you get guaranteed returns, and another where you get market-linked returns along with insurance.
Sure.
So yeah, all three are now picking up. And the space is quite heated. The competition is very intense. Most brands are not only looking to maximize their share on the aggregator platform, they're also wanting to build their own muscle on their own website, because they understand that the brand plays an important role in this space, because it's insurance is a long-term contract, right? When you buy insurance from an organization, you'll be there for 40 years, 50 years, and hence the brand plays a significant role.
Sure. So, and this is still a massively expanding category in some sense, right? So all the aggression that's going into marketing, is that meaningfully helping expand category, or is there a lot of market share grabbing already happening in terms of just shifting, trying to shift people from one brand to the other?
It depends on year to year. So the 2 years of COVID, there was significant surge that the category witnessed in terms of consumer intent.
Sure.
But last year, post COVID, the consumer intent went down, and it was expected also, because demand for certain industries is cyclical in nature, and obviously we maxed out during the 2 years of COVID, so there was it had to correct somewhere. So if I was to specifically talk about last year, it was mostly about grabbing more market share for most players, because the overall pie wasn't expanding. But yeah, in a 4-year to 5-year CAGR frame, the industry is growing at 30 to 40% year on year.
It's quite healthy.
Yes.
I mean, it's one of the good growth spaces in that sense compared to a lot of other spaces. 30 to 40% CAGR sounds great. But given the nature of competition, and given that the CACs / the bids on Google will always remain crazy, how do you navigate this? Are you like grow super aggressively kind of mindset, or no, more calibrated, controlled kind of approach?
No, we want to grow aggressively. We want to grow faster than the market. But we've realized that we cannot continue to sustain our growth only focusing on acquisition, because as you rightly said, the cost of media will continue to become more expensive. And hence, we have to figure out the entire funnel. We have a fair understanding of the full funnel for the customer. How do we ensure that our buying journey is the most friction free compared to others in the market?
Sure.
We not only benchmark ourselves to the other brands, we also benchmark ourselves to the aggregator, and I think our target is to provide a more seamless buying experience.
Sure.
Than even on the aggregator website.
You kind of preempted my next question. So you mentioned the whole full funnel. You can buy traffic, but beyond that, everything is in your control. So maybe let's just break down your funnel, Sameer, in terms of what typically happens as a first step where consumer discovers you, or maybe you're doing awareness efforts, and then there is consideration, and then there is conversions. What is your funnel, and what does your user journey look like?
So, because of the category, it's not a very pull-led category, and we have to do a lot of work at the top of the funnel stage. Because buying insurance is a latent need. Most people postpone this in their lives and don't think that it's an important decision early on in their lives. However, now they've started to realize the later you push this, the more expensive it'll get. And also, it's in the early part of your years that your liability is the highest, right? When you turn 50, 60, there are not too many dependents that you have, right?
Yeah.
So it's a decision that you ought to take early on in your life. So a lot of work is done on creating top of the funnel, and
you
usually
have both sides here. Sorry, just to expand this bit. Top of the funnel could be about brand, or could be about the category. And how do you kind of allocate attention to these two? Because everyone's trying to create the category, and you're trying to create the category plus also a preference for your brand.
Yeah. So the focus is on, I'd say, generating a funnel for the business. The brand consideration and awareness is an offshoot of what we do.
Okay.
So, while we continue to focus on maximizing ROI of whatever money we deploy, increasingly we figured out that there are certain avenues, certain channels, certain placements where the impact on brand is also significant.
Sure.
Right. So we try and maximize both.
That's measured using those brand metrics, kind of awareness preference surveys.
Yes.
Okay.
Yes. So we try and do a bit of both because the way the industry operates, marketing dollars come as a part of the revenue that you do.
Sure.
Right. It's still not a very brand-led category.
Yeah.
And hence we have to do justice to both.
Fair enough. So we're talking about the buyer journey in the funnel, how it plays out. So you have some places where you discover that the branding is also getting a bit of a boost while you're still getting your ROI from whatever traffic you're generating from those sources, right?
Correct.
So, let's just say there is an example platform X from where somebody has discovered it and they've now become traffic for you. So they've come to your interfaces. How does the journey flow from there? What are the different interfaces where you enter people from and how do they go in from there?
So, as I mentioned, primarily we have two product lines:
Yeah.
term insurance and savings / investment
Sure.
led plans. So we run separate campaigns for both, and uh, irrespective of whether it's term or savings, you usually land on a lead page, because as a category we are hungry for leads. And the first step that we want a user to do is to fill in their name, phone number, give their date of birth, gender, and so on. And then they get on to the buying journey, where they will decide what plan works for them best. In
And
case
this is still happening on the web interface. So somebody's clicked in and come to a landing page, filled up a lead form,
Yes.
which has a bunch of form fields which you're trying to make the most of in terms of information you need.
Yes.
From there, they get to a choice of plans,
Yes.
which would have a certain level. It's kind of the catalog page for
Correct.
an e-commerce platform.
Correct.
Okay.
Correct. So, so they select what plan works for them best, and then you can add riders to your plan, and then eventually you make payment. And post you make the payment, there's a long proposal form, because there are a lot of information
compliances.
that we need to capture, right, in terms of your KYC, your financial, your address, and your own declarations about your health and so on. So it's a fairly lengthy form. After that, every policy goes for decisioning. So we don't issue a policy to everybody who wants to buy from us. Everybody's case goes through checks, where we check their financial background, we check their medical background. Sometimes we do medical tests for these consumers, and eventually a policy is issued. So it's a fairly
Payment happens before the long the policy document plus the test and approval process. The payment actually happens before that.
Yes. The only reason for that is because the proposal form is fairly long, and
you don't want drop-offs there.
If we were to make them fill the proposal form before they make the payment, 50% of our funnel would be wiped off.
But this is something that you've switched recently, or has this always been the case?
It's something which the industry is following for the last 4 or 5 years. They've realized that that bit of friction is something that we cannot eliminate. We have to live with it, and hence we take the payment first up.
Yeah, fair enough. I mean, I would imagine this to be very similar to how a Big Basket or a Lenskart process the order, and after that they ask for, so the order is confirmed. Now you can pay in whatever fashion in Big Basket, and the order is confirmed on a Lenskart, and you can now put your power afterwards.
Correct.
So if you were to do it before, obviously there's going to be a funnel drop off. So this seems to be a somewhat smart thing to do to me to kind of reduce that funnel drop off. But now zooming into the steps where you still would see funnel drop offs, right? You had the guy coming into the platform, filling up the form. Is there a kind of metric on the form fill rate that you're watching actively, because that's a large part of what your spend looks like? And maybe there are some experiments to improve that number that you might have done and seen some success with.
Yeah, it's the funnel is still a very leaky funnel. To answer your question, let's say if we generate 100 leads, only 4 or 5 of them make a payment eventually, right? So there's a...
That's still not bad, huh? 100 leads. So what would be the form fill rate if there's an indicator there?
Form fill rate is same as leads, right?
So out of the clicks, the number.
Yeah, you're saying so click to lead would be about another 20%.
Sure. So 20% click to lead, and then lead to payment is
about 4 to 5%.
Wow, that's some sharpness.
Yes. So it's a lot of funnel drop. There are various reasons for it.
Sure.
One of the reasons is that there's a lot of information asymmetry in insurance specifically, right? It's not easily understood by everyone, and as an industry, we tend to use a lot of jargon. And the more time you spend in this industry, the more comfortable you get with those jargon, then you feel that it's something that a user would naturally understand. For instance, we use critical illness as one of the propositions that we give. It's not something which is easily understood by a layman.
Sure.
So that is one thing that we have to actively work on. The second is our TG is very sharp. And we don't get very deterministic signals on whether on Google or on Meta or any other advertising platforms to be able to sharply target our audience. For instance, we need somebody who's a graduate and above. We need somebody who's filing an ITR of 5 lakh and above. And so on. So there are a couple of other age cuts and all. And hence...
but you're not able to do these cuts on the current advertising platforms that you spend money
on. We do this to our best of our ability.
To the extent you can, sure.
Yeah, but there's still about 30 to 40% of the funnel is unaddressable of the leads that we generate. are unaddressable, and that's an ongoing struggle that we have.
So the moment people come to the landing page, about 80% of them would leave without filling up the form. But if you could find a way of understanding more of these people, that would kind of have a fairly large downstream impact.
Correct.
So, could you give us an example of some of the experiments you've done on this particular aspect of landing to form fills, and what has worked for you?
Yeah, so a couple of things that have really worked for us. One is page load time. I think we struck gold when we figured out that the page needs to load in 2 to 3 seconds, even on a 3G fast network.
Okay.
Today, we assume that everybody is on fast network, everybody has 4G or 5G network on their phone. But the reality is when you're traveling, you're on a metro or you're on the move, your network is not as fast.
Sure.
Right? So how fast does your landing page load has significant impact on the funnel.
Wow.
The second thing we figured out is context carry forward. So you would have seen certain ads, whether on search or on display. Are we carrying the same story on the landing page or not?
Okay.
If the two don't talk to each other, then a user might just feel that, okay, I saw some ad, I have accidentally landed on some website which is talking about something else. So carrying that context forward. That is the second thing that's really worked. The third is just how simple form filling is. How many questions are you asking? How difficult is it for the user to complete the whole form and move forward? And the fourth is, are you able to, in that first few seconds, tell him what do you offer?
Okay.
Right? So it's a difficult job.
So when you say what do you offer, this is about differentiation or proposition, or what is this we're talking
So let's say you've landed on a term insurance lead page. What does our term insurance plan offer? So we should be able to communicate that to the user.
The most important parts.
Yeah, in the first few seconds. We cannot have too much information because then it will clutter the page and the user's attention, instead of filling the form, could go on just reading the content. But we still have to do enough so that they understand what is it that they're here for.
Sure. And among these experiments, would this vary a little bit depending on what kind of traffic source they're coming from? Because you have, let's say, somewhat high intent search campaign on Google, and you have not clear search intent. I mean, there's no intent per se when you look at a meta kind of traffic source.
Correct.
So how do you differentiate between these two in terms of the treatment of people coming in from these sites?
So, yeah, of course. So depending on what was your search keyword or depending on which creative you clicked on, as I mentioned, there's a theme that we pass as part of the URL of the campaign, and this is that theme, the landing page is customized. That is one thing that we do. The second big thing is, as you mentioned, somebody coming from search is an intent user, whereas somebody coming from display could just be exploring. Right? And hence, we assume that if you're coming from display and this is your first visit to the website, even though you're clicking on, let's say, a term insurance creative, or you're clicking on a term insurance with money back creative or term insurance with critical illness creative, we assume that the intent is not clear. And ideally, we've not done it yet, but we want to do some sort of a need analysis for this user rather than making him fill the lead form directly. So that's an experiment that we're doing right now as we speak. Because we feel that this is a noise that we get from our sales also, that a lot of these leads, when we call them or talk to them, they'll say, okay, we don't know why we were here for. We just landed accidentally. And hence it's important to understand what life stage are they in, what is top of mind for them, and why is term insurance important for them, if at all. We offer other products also on the website. So it's quite possible that you clicked on a term insurance creative, but you end up buying something else from us. So we have to keep that conversation open, at least for folks coming from display.
Sorry, so you said the display folks come in for term insurance. They've clicked an ad for term insurance essentially, but they ended up buying something else.
Yes.
But where does the discovery of that something else happen? Because if he's landing on a lead form, this is supposed to have a specific buyer journey, right? So, I mean, at what point does he navigate out of this buyer journey into something else?
What we've done already is for folks coming from display, we have a toggle in the lead form where they can select between whether they want to buy term or they want to buy savings investment. This is working for users who still know what a term product is and what a savings/investment product is, but a large audience would not even know the difference between the two. And hence, what I was saying is that we want to do a need analysis for this set of users before they even get into either the term buying journey or the savings
Got
buying
it.
journey.
So one of the things that maybe we do on the B2B side of things is to understand the top of the funnel actually does not land on a lead form, it lands on content.
Correct.
So you just educate the users more and more about the subject.
Correct.
Is this something you've considered, experimented, done anything?
We have experimented with in the past because again the hypothesis was that even if they read one paragraph of what is it that we are offering or what is term insurance, they are more likely to be engaged and more qualified user going forward.
The intent gets stronger in some sense.
But the session to lead dipped. I think if it was, let's say, 30%, it dipped to about 20% or 15% when we were doing this experiment. And suddenly the whole ecosystem becomes very nervous, right? Especially the sales becomes very nervous because we have monthly targets and plans to meet. So we've not been able to do justice with this experiment, I'd say.
So, are you able to stitch the full funnel? Because I would imagine if it's getting squeezed here, it'll be better downstream, but you don't know.
It takes time, right? For this experiment, I'd say for us to conclude this properly, we would need 2 to 3 months because our look to book cycle is fairly long.
Sure.
Right, and it's just a matter of when are we willing to take that risk. But yes, we are on that journey. So whether it is exposing them to content first or just a simple game which makes them realize what is important for them at this life stage. That's something that we want to do before we.
I'm actually curious in terms of buying your first insurance ever versus, you've had something for the last certain amount of time and you may be looking to top up or expand or whatever. These are very different buyer personas as well, and their education needs might also be very different. So I'm curious as to, how do you address this, given that this is a category expansion plus brand preference play that you're working on, and there's a lot of nuance in this treatment of these people. So at this point, from your advertising communication perspective, are you able to address these people differently?
If your question is whether this person has other insurance plans or not, I don't think so. We are able to figure that out at the initial stage.
Would you consider that to be a useful variable for you to kind of fork out the journeys?
We haven't thought about it. Actually, the reality in India is a lot of people have insurance plans which they don't know what
because
they
it's
do
from the employer or whatever.
Yeah, so either they would have bought it as part of it was mandatory to along with the home loan, or let's say some family member recommended that you take this LIC plan. So they would have a couple of policies, but they wouldn't know what they do for them. So I wouldn't say that this user is more nuanced or understands insurance better than somebody who doesn't have an insurance plan.
Oh, so there's a guy who's got insurance but doesn't get it. Yes. There's a guy who doesn't have insurance who also doesn't get it.
Yeah.
So, then the treatment is the same.
Yeah, so it's safe to assume that you don't get it and try and solve for that rather than segmenting the users.
Very interesting. So in terms of the universe that you're chasing now, what kind of, let's say, spread of Facebook creators would you have? Simply from the point of view that these are different campaigns you're running or messaging styles you're running, because at least age-based targeting is available, gender-based targeting is available. So within that ecosystem, what are the different structures of messages that you have?
So we talk about our top propositions, especially in term insurance. There are 4 or 5 top propositions that work for us. And we have a good interplay in terms of what type of creative and placements we're using to take those to market. Covered. But for the largest time, we were dependent on statics. So 90 to 95% of our creatives on Meta were statics because all the video creatives that we had gone live with were majorly an offshoot of the brand films that we had done, and we had basically adapted them for digital, right? But they never won in terms of driving ROI for.
Because the resonance of the message might be diluted if you're just doing brand play, right?
That was also, but second, we realized that again, as I was coming to the point, that users are looking for more relatable content. When a celebrity is telling you something about insurance versus a normal person who you relate with, and where the focus is on the person rather than on the product or the proposition. I think those kind of video formats are working really well today. And in the last 2 to 3 months, we've pushed the pedal on this, and already 25% of our inventory is captured by that Reels format on Meta.
Wow.
Which makes us believe that if we can get to 40 to 50% of our overall impression share from these
Brands as well as UGC.
Yeah, from the UGC content, then the impact on brand will be significant.
Plus, this is also in some sense what we in our world call the middle of the funnel, which is confidence boosters, right?
Yes.
So the guy who's kind of become aware,
Yes.
he still needs credibility around who you are and why he should choose you over the others.
Correct.
So, all of this UGC, if it's in some form of a testimonial, that should ideally inspire more confidence and credibility for the platform.
We were actually doing a survey in trying to understand why do users choose our brand, right? So they've bought from our website, but we still don't understand why did they come and buy from us,
Sure.
right? So one interesting thing that came out was that even before they came on our website or they went on the aggregator website, they were actually searching for how to select the best term insurance plan on Google and on YouTube. And they did a lot of research and they were only trusting independent bodies.
/bodies.
Yeah, so they were not trusting brands, what the brands were saying. They were only looking at independent blogs on Google and videos on YouTube. And they happened to recommend Max Life basis various parameters.
So product design kind of.
Let's say the market share, the product feature, the service, claims paid ratio, which is an important part in our industry. And that's when they decided, okay, this seems to be the brand to go with. And that's when they would have visited our website or the aggregator website and made their choice. So the research stage, when actually the decision is happening of which brand to choose, we're not even present.
Yeah, and you can't even be present.
I'd like to beg to differ on that. So, one of the key projects that we're working on now is thought leadership in this space, right? How do we create thought leadership where the outcome is not that the user will click on that ad and visit our website. The outcome is only to educate the user on what is the right way to go about selecting which plan is best for you. And maybe then at least we'll be able to participate at the research phase and have a better understanding of what the customer wants.
Would this be done on your own website, or would you end up creating a separate real estate for this?
So we've, I don't want to disclose too much information, but there's a portal that we're working on, which is a content aggregator platform.
Fair.
And similar to what an Investopedia would do or a TripAdvisor would do.
Yeah. It's very top of the funnel, very education focused kind of content.
So
makes sense.
So we're working on that.
Very interesting. So yeah, I'm in complete alignment of doing this. The reason why we're doing all of this education effort is similar approach that if you educate people well enough, they would make fair choices, and that fair choice you will get your chances as well.
Correct.
So fully aligned on that one. Awesome. So so I'm going to come back to our funnel pace where you had all of this different Facebook creatives. Now there's a bunch of UGC involved, and you're driving traffic from there to the platform. And let's just say there are gender segments, age segments, city segments which are available. How does the treatment of somebody from a tier 2 city, male above 45, differ from something else? What is the basis in which you would cut this out, and how do you treat them differently on your landing pages? Any examples you can give from there?
The key segments that we focus on in our category is age, because age is a surrogate of your life stage. That is key. So whether you're a first jobber, or you're somebody who's newly married, or you're married with kids, so that completely changes the conversation as to why are you investing or buying a term insurance or a savings/investment plan. That is one. The second is whether you're a salaried or a self-employed. So in our category, you have to provide income proof, right? And as I mentioned that you need an ITR of 5 lakh and above to buy a term insurance plan. So the journey is very different for a salaried individual and very different for a self-employed, because most self-employed won't have an ITR to prove their income. So their ITR would be, let's say, 3 lakhs, but their income would be 30 lakhs.
Yeah.
So the treatment is very different. So that's one key segment that we have. And gender, we are focusing on women because traditionally the industry was focused on men. Our key TG was men because they were traditionally considered to be the ones who are responsible for providing for the family, but that's completely changed, right? And increasingly more working women are realizing that they have whether it's their parents or their families, they're responsible for them, and they need to cover their life as much as their husband needs to. So and it's an unaddressed, untapped segment largely. So.
Sure, and that's the part where, I mean, you're probably doing your own insights and choosing to over-invest in some segments of the market compared to what competitors might be doing and compared to what you've done previous year as well.
Correct.
So this is the growth opportunity, women who realize that they need to buy insurance.
Yes.
Very interesting. And from a treatment and messaging perspective, again, the story that you told on the Facebook ad vis-a-vis what you're now communicating to maintain the context on the landing pages, maybe can you give me an example of what do you tell women, for example, there and then here? Is this cut by age, by geography as well?
We don't have further segmentation in women. There's only one segment, whether you're working or you're a homemaker. But yes, we do want to have very contextual communication when we're talking to them.
Sure.
Because in most cases, they're either trying to buy insurance to protect their kids or they're doing it for their parents.
Sure.
Right, and the conversation we would have with them is very different. We can't use the creative where a man is taking care of his family, which is what we do for most of our creatives.
Sure.
Right? So that needs to change.
And what I'm trying to understand better is the cuts, right? So you said the male to female cut is a certain number, and then there is the age cut, which is the life stage equation.
Salaried, self-employed.
Salaried, self-employed. So, they're ultimately going to be X number of ways of slicing the audience. And some of them will end up being the largest part of your lead share, so to speak, which will hopefully, I don't know if the mix of lead share looks the same in the mix of revenue, or is there very different conversion behaviors from different segments?
There are. So, for instance, women convert twice as much compared to men, and that's why I was saying it's an opportunity.
It's an opportunity for you to spend more time.
So when they come to our website and create a lead, they mean business. They're not just goofing around or just clicking on an ad and then seeing whether I want it or not. So yeah, that's.
Does it also show up in the sales cycle length?
I haven't looked at that cut as yet, but I assume their look to book window should be shorter, I'm assuming.
So Sameer, we spoke pretty extensively about understanding how the different segments operate in terms of how they discover your platform via ads and search or Facebook, and then how they come onto the platform and what you do to continue the context, so to speak, right? But we also spoke about how the form fill rates are about 20% and how the fill rate to the lead to purchase rate, which is the payment stage, is a smaller percentage as well. And I can imagine you'll be doing more multi-channel interventions to improve these metrics as well. Right. Could you tell us a bit about those?
Yeah, so in terms of we call it chase or engagement. We depend on various channels, remarketing being one of them. We use SMS, email, web push, and WhatsApp.
So the first stage where the guy is not filled up the form yet, you won't have contact details, which means you'll be dependent on, let's say, a web push.
If they've subscribed to our web push, yes, we'll be able to reach out to them via web push. Otherwise, what we do is the way our form is structured. We start with capturing the name, then the phone number, and then the 4 other fields that we captured.
So you're saying it's, even if you filled up the phone number and not submitted, you'll still be able to capture.
So if you tab out from your phone number, we call it lead initiated.
Sure.
We capture that event. So we have a separate campaign which runs for lead initiated but lead not created.
Okay.
That covers for another, let's say 10% of the total. But yeah, the larger audience who've not filled up the form, we will continue to reach out to them through remarketing.
Which is the display retargeting ad ecosystem.
Yes. And then
web push. In terms of the level of recovery able to achieve with that, how does that number look of what you're able to bring back into the funnel using retargeting, for instance?
In terms of percentage, it's very difficult to quantify this because it's tracking cookie across multiple devices is not easy, right?
Yeah.
So I don't think whether we'll be able to figure out at a unique users level of the total people who drop out, how many are we able to capture back.
Okay. But you said the web push side, whoever subscribed, are you able to share a number on what percent of people tend to be okay with web push versus not?
Of 100 users who come on our website, I think 10 to 15 would subscribe to the web push.
And have you done a lot of experiments to improve this number in some sense?
No, not gone really aggressive. Actually, we've been working on a light app. So recently we've launched our own app, which is nothing but a wrapper around our website. So an Android wrapper on the mobile website and an iOS wrapper on the mobile website. And hence now the app push also comes into picture.
But then this would mean the app to be utilized a lot for people who are coming into the platform to buy insurance for the first time, or a lot more for people who bought it and then now they want to continue engaging?
So the primary target audience is existing customers,
Sure.
and also users who are late in their purchase funnel.
Okay.
It's not meant for top of the funnel.
Yeah, because this is one more conversion step, right? Because
Yes.
whatever people are coming in, if they're not even filling the form, to expect them to install the app would be a sharper funnel.
Yeah, it's not for the top of the funnel. It's for if you're late in the stage of buying. Let's say if you already made the payment, or you're at the stage of making the payment. Some people feel more comfortable making the payment on an app. I was just having this conversation with a friend where he is a existing customer with Max Life, and the minute I told him that we've launched our own app, he said, okay, now I'm going to download the app and make the renewal payments on the app. And my question to him was, but it's the same experience that you'll get on the website. It's just a wrapper. He said, no, I'd rather do it on the app. So in terms of the consumer psyche, they are convinced that if you have an app, it will provide a better experience, and it's a more trustworthy environment than.
Besides, I have a strong relationship with the brand I'm buying insurance from, so I'm okay to retain that app on my phone and kind of watch it every once in a while.
Correct.
But what are the use cases except renewal payments? This is just once a year kind of a structure, right?
So we're trying to work on engagement as a key metric. See, what happens is most of our customers who've bought insurance, let's say there's a customer who's bought it for 40 years. The only touch points we have with that customer is during their renewal cycle, right? And we don't really go back and communicate or engage with them on a regular basis. However, at various stages, we do try to cross-sell another product to them, right? And at an org level, the penetration is significantly high. One customer would end up buying 2.5 policies on an average, right?
Sure.
To be able to cross-sell or to be able to retain that customer for a long period of time, engagement is a must.
So it's a definitely interesting topic, Samir, but I'm going to hold this off and go back to our 100 to 20 and 20 to 4, because I'm dedicating a full part of the conversation to talk about what happens after this 4 have made payment and how do you engage from there.
Sure.
But coming back to our step around multi-channel plays, you spoke about web push being an interesting channel, and the 100 to 20 journey is aided a little bit recovery by the web push of whoever people are able to do. So what's the playbook there? How often do you engage? What do you say? How do you get people back into the form fill, so to speak, right?
So for web push, we have a weekly calendar. We're not doing a very segmented funnel-led conversation on the web push. It's a standard weekly calendar that we've created, where let's say we'll talk about, for instance, closer to the tax date, we were talking about that 31st is the deadline for doing your investments to save tax. So these are XYZ that you could do.
There's seasonality to it, and then there's a calendar approach to it, which would be the communication flow.
Yeah. So we're just focusing on covering the full breadth of what is it that we can, what is it that we offer to the customers.
Hooks that should be the right possibilities to engage with.
And more of an education initiative. So engagement is the only objective as far as web push is concerned. We're not evaluating web push from how many leads were generated or how many sales were we able to get from that channel.
Bring back into the funnel.
Yeah. How many are we able to bring back into the funnel? That's the only objective.
Fair. And so now these people have filled up the form, and web push so far and retargeting were the other components of how do you get people to fill the form. But you said there's a multi-step form. So people who have put phone numbers versus people who have completed the whole form. I'm assuming that 20 is the people who completed the whole form.
Yes.
There's a larger number of people who have given you phone numbers.
Another 10 who's given us.
So 10% delta, phone numbers, but not the full form. Yeah. What happens with these guys?
So for them, we run a SMS campaign, which is lead initiated, lead not created. We don't use WhatsApp for this because a lot of times these numbers are incorrect. Because if the user dropped off before completing the form, there is possibility that they did not enter their correct number or their full number and so on. Also, because these users are uninitiated, sending them a WhatsApp would be equivalent of spamming them.
Sure.
So we use SMS, and we don't do too much communication. We probably do 2 chases, one after 60 minutes of drop off and one, let's say, another 24 hours after, and then we stop.
But does this change basis versus the high intent guy versus a display guy to begin with?
Not really, because if you've come via search and you still drop off without filling the lead, we consider that the intent
Intent
was
was
low.
not as high as it could be. Sure. So then there is this 10% audience which has phone numbers, which would get a couple of SMSs as a chase, but then you kind of draw a line because you don't want to be persistent beyond that.
Yeah.
And now, is there any more steps to the form where you have another set of people in there?
No.
So it's either this people who fill numbers or it's the complete lead form, right? So this then is 20% of your audience. Now this 20 to 4 journey, let's zoom in on this as to what happens, how does the drop-off work, and how do you cover for those needs?
So once you've created lead, the next step that you do is basically selecting what plan works for you, right? I'll talk about term insurance specifically. So how much cover do you need? Whether you need a 1 crore cover or a 2 crore cover. Till what age do you want to cover yourself? And till what age do you want to pay your premium? These are the 3 big questions that you need to answer, right? And for the longest time, we assumed that our journey is fairly simple. The UI is uncluttered, uncomplicated, so the user should be able to make these decisions on his own. But lately we've realized that these are choices which a common user is not able to make on their own. They don't know till what age should they cover their life, right? It's not something which they're aware of. They don't know.
It comes so simply.
Yeah, it's not that easy. So now we've tried to create videos around each of these themes, right? So how much cover do you need? We are creating a video on that. Till what age should you cover yourself? So it could be different for somebody who feels that all my liabilities get over at the age of 60. For that person, you might want to cover your life only till 60. But for another person who feels that, I will continue to have liabilities till the age of 70 or 80, you would want to cover till that age. So it's different for different users depending on.
So it's like that little I button which if you click, you will see a video where this is how you decide how much to choose. Okay?
Yeah, so we'll do this on the journey as well as use WhatsApp for communication. For users who are stuck on lead created but have not created a quote, our best assumption is that they have not been able to figure out how to select the right plan, and hence we try and assist them. We call everybody.
You call everybody?
We call everybody. The minute you create a lead.
Oh, no wonder you have those hundreds of.
Yeah, telecallers. Yeah, we have a lot of them.
That's the nature of the business.
So what we figured out in the past is that if we don't connect in the first 2 to 3 minutes, our connect rate will drop to less than half. Wow. So let's say in the first 2 to 3 minutes, we are likely to connect with 30% of the users are likely to pick up the phone. After that time, it could drop to 10%. Okay. And hence we try and at least connect once with the users in the first 2 to 3 minutes.
Small little nuance. I'm assuming your number is also Truecaller verified so that it doesn't look spammy.
Yeah.
All that is covered.
Yeah. We do all of that. Yeah. Sure. So that's bread and butter for us.
I would imagine so. Yeah. So now you have whatever X number of people filling up this form completely, getting to the plans page, and then getting a call from somebody in your team whose job is what? To kind of help them complete the form?
So their job is to just move them one step forward.
Okay.
So if they're at lead stage, their job is to at least get them to create a quote. If not, make a payment.
Create a quote would need you to enter those 3 things, right? How much, till when, and till when coverage.
And then select riders. So the second step before the quote is to select what riders do you need. Do you need additional critical illness riders? Do you need additional accident riders? Or
there is all a whole bunch of education that needs to happen. So is this something the telecaller would end up like explaining that, how do you decide how much to choose?
They have a standard script, but there's only as much that they can cover in that call, right? So because they're also wary of the fact that if they go on educating the customer too much, they might lose interest and just drop off, right? Yeah. So you could be in the office while you're on the call. You could be on the move while you're on the call. So you may not want to talk to the agent for a very long time.
Sure.
And hence they try and focus on key propositions that the plan has to offer. How are we different from others in the market?
90% plus drop off from lead to the payment. What are the big components in your impression? There is the generate code, and then there is a view plan, and then there is a payment.
So lead to code usually is a 40 to 50% movement.
Okay.
So 50% users.
It's substantial.
Yeah, it's substantial. So 50% of users don't move to quote. Now, I'm talking about this in the same session.
Sure.
If you look at it over a 7-day or a 30-day, probably the movement will be much larger. Sure. But in the same session, it's about 50% drop, which means that 50% users, even after creating a lead, are not able to either figure out how to make a quote. An interesting observation that we got earlier was that most people are only coming to check their premium. So the hook that they have is to check, okay, for me, how much would it actually cost to buy a 1 crore cover or a 2 crore cover? And the minute we show them that premium, we lose them. An interesting study that we did was, once you create a lead, you land on the quote page. And we were asking a couple of additional questions from the users. It was a simple layover pop-up form with tap inputs, right? So we were asking whether you're salaried or self-employed. And background mein quote page load ho raha tha. In the savings journey, the quote page was dark and you couldn't see what's there in the quote page. But in this term journey, the quote page was translucent and you could see what was there in the background. We saw here almost 25% of the users did not even respond to that question, salaried or self-employed, because it was just a tap response, but they did not move forward. They dropped off. We were banging our heads. The UI seems okay. It doesn't seem to be adding too much friction to the user. Why are they, after filling that entire 6-field form, why are they dropping off? Because they saw their premium at the background. Right? So, in the past, we've debated this multiple times, that why not have a quote first journey? Why force everybody to create a lead?
Correct.
Because most of them are coming to play with the calculator.
Correct.
That how much my term insurance costs. The minute we do that, our leads will go down by half. If not more. So yeah, these are some interesting nuances.
Which is the constant battle, right? Because would you rather have higher quality leads which have an intent which is clear, or would you have a whole bunch of people who just intended to check quotes because you're spending money across the whole funnel for each of these? Every single call costs money, right?
See that I'd like to talk more about that. Our marketing spends are 90% of our overall acquisition cost. The call center spends are negligible.
Okay.
In the overall scheme of things, the call center costs are negligible.
So what you're saying then is you don't mind calling every customer because it's anyways too sharp a stage.
The only downside is that we're spoiling their experience, and it's the frequency with which we are reaching out to them, or when are we reaching out to them, or how systematic we are about when is the follow-up placed, and is it as per their choice and convenience or not. That's something that we are working on. But we don't want to save money.
That's not the problem area to kind of chase. So now we've gotten to the point where you've used WhatsApp to improve conversion rates from the lead fill, and you said half of the people end up looking at the quote and kind of moving out from there. But then there is a bunch of people who generate plans, and then from there there's a much sharper drop once again. So what is that about, and how do you solve for this?
So once you've created a quote, from there on, it's mostly about urgency. Ours is a category where people usually kick the ball down the road, right? So there's always something more important in your life, right? So you have to buy a new iPhone. It's definitely more important than buying insurance, right? So that's a constant battle that we run. You would have seen, I don't know if you've been served those ads. Typically, most people in the insurance industries have been running a lot of fire sales in the last 1 year or 2 years, because there have been multiple price increases. So since COVID has hit, the mortality experience has worsened. And because of that, our prices, we get prices from the reinsurers, and that is baked into our overall pricing and product strategy, right? So because of that, the prices have been increasing. And every time there's a price increase, most insurance would say that they'll start running a fire sale कि 1 महीने बाद आपका price बढ़ने वाला है. So do whatever you want to do now. And we've seen every time we've done a fire sale, the sales for that month go up by 30 to 40%.
Indians love discounts, right? Whatever you call it.
More than discounts, it's just that creating that urgency that what I'm getting today, I will not get tomorrow. 1 month later. The other key aspect that we leverage is birthdays. Right? So you're 34 right now, and you're turning 35 in a couple of months.
Right.
So a couple of months later, the premium will increase by 5 to 10% for you.
Because the age changes the premium.
And over a lifespan, let's say you're covering yourself for 40 years, the total amount of money that you will end up paying is significantly higher. If you delay the decision by
the more you
2 months.
Benefit.
So these are some hooks and levers that we've been using. But there's more work that we need to do in terms of creating urgency, because In our category, we are not able to run discounts. We're not able to run promos or sales, and hence that's not a lever that's available to us.
Is that a regulatory topic?
It's a regulatory.
You can't kind of bribe people into
We
buying
can't,
insurance.
yes.
You can't offer like
you can't even give them Amazon vouchers.
yeah, or like 100 people, one would get an iPhone kind of stuff. You can't do all of
No,
that.
you can't. You can't.
And this is the same for every player. So has anybody done something more innovative to drive conversions at this stage, just from an urgency perspective?
Mostly, it's about price increases, or it's about tax deadlines, or your birthdays.
This is once a year.
Yeah.
I mean, so the opportunities per. I mean, as a system, of course, you have somebody's birthday every day, but tax deadline is only once a year for everybody.
Correct.
Which means the opportunity that you have to create this urgency is then only so many.
Yeah. So one problem statement that we are wanting to solve is how do we create a new conversation every month to create some sort of an urgency.
In the absence of incentives. So it's actually a very hard problem to kind of crack. But there's also room for a lot of creativity in some sense.
Yes.
But nothing changes from month to month, right? In that sense.
It does. So let's talk about savings or investment led products, right? For instance, we're talking about the market linked products. So if you go on Policy Bazaar, you'd see that when the market is down, they'll talk about this is the right time to invest because the market is down.
Yeah.
And historically, every time the market has gone down, it's come back and it's come back stronger, right? So they'll show graphs of how the market is responded. If the market is on the up, they'll talk about it's a bullish sentiment now. This is the right time to enter. So there are conversations that you can weave. It's difficult, and given the IRDI ambit,
this is how those come to, right? I mean, subject to market risk, wala part to
so we have to be careful that we don't mislead the customer, we don't use misinformation. But yeah, there is room to play.
There's room to play. So term में नहीं हो सकता तो यहाँ तो हो ही सकता है. But then this would mean that the guy who came in for term but who's not finished his term closure, you will still try and get him to this other thing.
Correct.
And this is actually not. I mean, I don't know if you will have multiple term insurances, maybe not, but at least this one you can always have multiple.
You can continue to invest, and increasingly people are realizing that more than maximizing your returns every year. It's how long you stay invested makes more sense.
The bigger impact.
Yeah, and insurance by construct itself is long-term investment, right? So most plans are 10, 15, 20-year lock-in. So yeah, the awareness about staying invested for long-term in a plan which gives you predictable returns is increasing. And hence this
is good for the category overall. That's
growing.
all awareness wala kahani.
Yeah.
Okay, so if you're able to find a creative way of creating urgency more frequently, apart from the birthdays and the tax deadlines, that would be very powerful.
Yes.
And yeah, I mean, then you'll be able to peg yourself more effectively against iPhones in some sense.
Yeah.
But yeah, I mean, there's only so far. But what I'm trying to now again zoom into is from a customer persona point of view. Does any of this change? Because people might be motivated by different things. So let's say the woman who is trying to insure for her parents, if there is a Diwali or whatever festival, and there are other occasions that happen through the year which are maybe gifting opportunities, maybe something. But have you captured the birthdays of the parents in this scenario?
Insurance has still not become a gifting category so far. But I mean, it's a space that we can explore.
It's still idea, which means it'll take its own time to mature. But at this point, there's no way to think if the behavior would be any different for the kind of different cuts you have at the starting point.
In terms of creating urgency, mostly life stage does have impact in terms of how motivated you are to invest or to take a term insurance. But we don't get to know your life stage with that much accuracy, right? So we wouldn't know with at a 1:1 level whether this person just got married. We would only know this at a segment level. So yeah, but when the telecaller...
But Facebook page, if you were setting up a campaign which is two married people who are clicking that campaign are likely to be married. You don't carry the context forward.
Still 70-80% accuracy.
Sure. Okay.
So it's still not, they cannot still tell this with 95-100% accuracy. And hence...
then the guy who's calling doesn't ask you this information?
When he does, yes. So the minute he gets a grip on what is the motivation behind you coming to the platform today, they are able to weave the conversation in that direction.
So that's what the telecaller will do. But does any of this carry forward to your re-engagement or whatever?
Not yet. So there's a lot of, in terms of leveraging technology to hyper personalize our communication. There's a lot that we do on the marketing side, on the website,
Sure.
but we've not been able to weave that seamlessly on the sales side. While there are signals that flow from the website or the marketing campaigns to sales, but flowing them back from sales to this side has not been, we've not
It's a
cracked
question
that.
to solve for in terms of what all the structured inputs you will take and what would these structured inputs mean and how would they translate into
Also, a
communication
lot of
changes.
times there's human bias, right?
Yeah.
So when a telecaller is interacting with somebody, if he's not in the mood today, he could tag that lead as let's say
Uninterested.
Uninterested or not eligible. I can't take that as as truth and then feed that into my system. I have to look at other surrogates of whether
Well,
this
it'll end up
person
being a
is-
lead score of some sort where this carries some weightage, but not 100% in some sense.
yeah.
Very interesting. So it's a comprehensive play clearly to be done. So Sumit, we spoke pretty extensively about how the journey from campaigns to leads happens, how from leads to quotes and plans happens, and to payments happens. People have paid money, and that's whatever sharp level. It's still a substantial number. Now, from this point, what happens next? Maybe is there a step after this also that people tend to drop off at? I would imagine that to be a small because I've already committed, but I don't know. You'd have to tell me there.
Yeah, no, so there is further drop after that. So of 100 people who are making payment, we are able to issue a policy, when I specifically talk about term, only to 75.
Okay.
70 or 75. So 25 to 30 people, they're not able to furnish income documents to substantiate their income, or there's some finding in their medical tests, which either means that for the same cover they have to pay more. We call it a counter offer, because let's say you're diabetic or you have some other illness which makes you a more risky life.
Sure.
Right, so we'd say, okay, for the same cover you have to pay extra, and every time we give a counter offer, a chunk of the users drop off. They'd say,
Sure.
okay, nahi, matlab,
So you said 75% would get it, or 75% would get it at the terms they were offered to start with.
75% would eventually get issued,
Okay.
right, which includes
I'd
people
say
who would have
counter offer accept karne wale.
sub mila ke 75 would get their policy issued, 25 would not. So that 25 would made payment but not able to buy, right? Could be because let's say they had during the COVID we had a policy that if you've had COVID in the last 3 months, then you cannot buy insurance. So there are these underwriting guidelines keep evolving and keep changing.
But you don't change it at the top of the funnel, matlab it's much down the road.
Yeah, and we do a very bad job at keeping this set of audience warm, right? So because they've already gone through from that 100 to 4 stage, right? And they've been with us through the funnel, they made payment. Ideally, we should be able to, at the least, give them some other product.
और नहीं तो 3 महीने का है तो 2 महीने में खत्म हो जाएगा ना?
हाँ, हो जाता है, but वही मतलब these journeys are not stitched as yet, because most of our focus has been till the payment stage, and we've not really invested a lot of time beyond that.
That's also a function of how the org is designed and how many things can you care about it.
Yeah. So it's just we've just not been able to prioritize this leg of the journey. But yeah, there's a significant drop
Room
off.
to kind of recover that.
Yeah,
Okay.
so that's one. The second thing that becomes key is upsell. Right. So at the time of sale, as I was mentioning, a call center agent would typically sell a 1 crore cover, and the combination which poses least resistance. Right. However, once you made the payment and either your policy is issued or you're awaiting issuance, you can actually have that conversation that maybe for you a 1 crore is not enough. You should actually look at a 2 crore, and it's only this much more money. Or let's say this is a rider that you had not added. Would you consider? So there's a fair amount of upsell conversation that can happen.
So riders also change premium.
Yeah, and even after your policy is issued, because the underwriting has given a decision, at this stage we know that what are you eligible for.
Can you zoom into a little bit in terms of the underwriting part as to what's that cycle length like, and is that a manual process? Somebody would look at it, kind of put some sort of a decision framework back, and then it will get decided. How does it
So
work?
from payment to issuance, it would take, let's say, about a couple of weeks.
2 weeks
in total. 1 week. This would cover 90% of the customers,
scenario,
right? So let's say about 1 week you take in furnishing all your documents, filling up that form, and doing medicals.
Okay.
So sometimes there are home medicals. Somebody will come to your home and take a sample.
But do you facilitate that, or would people have to do it on their own?
No, we
You
facilitate.
facilitate that.
We facilitate that. Or sometimes you have to go to the center for a medical.
But this is like, is there a system around tracking? Iski appointment ho gayi, ho gayi, ho gayi. It's your system, partner system. How does it work?
It's our system, but then we have to integrate with multiple TPAs, and again the back end system of all of this is disjointed, right? So often. What is actually happening at the back end, we will not be able to communicate the same to the customer. So, there's a fair amount of work that needs to be done here. But having said that, yes. So let's say about a 1 week time to get all the documents and medical and everything in order, and then another 3-4 days time for the underwriting decision. So that's how it's typically a 10-day cycle.
But there is room to reduce friction here, which might improve this number.
Yes.
Okay. But in terms of your communication flows, this will end up being a lot of phone calls now.
So mostly it's a call center driven chase because, as I mentioned, the backend systems are not fully integrated.
But this call center would be able to see he has an appointment booked kiya tha, but he didn't kind of go for it. So now I have to remind him to take the next appointment or whatever.
Correct.
That whole workflow. Got it. So let's say that we've kind of got to a place where people have bought policies, they've been issued policies, and now it's time to cross-sell, upsell, renew. So cross-sell, upsell windows are about the riders perhaps in some sense, increase coverage perhaps in some sense, and the other product line itself. So somebody who's taken term might be able to take the investment product. Right?
Correct.
So how does that play out in terms of how do you decide who to sell what to, and how do you actually go about it in terms of communication flows?
So in the first 1 month after policy issuance, we call it the free look period. At that point in time, a customer is free to cancel their policy and they get all their money back.
Wow.
Right. So
does that happen?
Yeah.
What percentage?
It's very less. So it's about 2% or 1%. It's very less.
I was looking at a funnel and it would drop. It's just so disappointing in some sense. But yeah, that's the reality of the life.
That's the reality of the business, how it is. So during the free look period, while you're free to cancel your policy, you're also free to upgrade.
Okay.
Right? So you can add riders, you can increase your sum assured, you can reduce the payment term that you have. Let's say initially you said it's a 40-year policy, you will make premiums, you will pay premiums in 40 years, but now you feel nahi, 10 saal mein pay karke khatam karte hain, at least.
Edit essentially.
Yeah, so you can do all of that.
But would this again go to an underwriting cycle or will it not?
So, no, it does not. It does not go to the underwriting cycle because by now the underwriting has already given that what are you eligible for. So we know like that this customer bought actually a 1 crore cover, but he's eligible for a 2 crore cover. So we know, okay.
So you've already defined the outer limit of what can be offered to this guy.
Yes. So it's all very easy. And hence the first month our effort mostly is on upsell. After that 1 month, your question was what to decide kisko kya pitch karna hai. So it's mostly a factor of let's say there's a person whose income was 30 lakhs and he's bought a 1 crore cover. So our pitch to that person would be, I think you should take a higher cover because you're eligible for more and you need to take more to be able to cover your life. So for somebody whose income was 10 lakhs and he's bought a 1 cover, we'll probably not pitch a higher cover. But depending on what riders you've taken, we'll pitch riders which you've not taken.
And how many riders are usually available?
4 to 5 riders.
4 to 5 riders.
Usually.
So accident, critical illness type of stuff.
Yeah, so there's accident, there's critical illness, there's a waiver of premium rider, then there's a rider in which you get all your money back at the end of the policy.
And each of them have a price point, and it's kind of like a cart where you can add stuff.
Yes. So depending on what you've taken and what you have not taken, we would pitch that to you.
So this is the first 1 month of very aggressive activity of getting him whatever else he wants to edit in his original order, and then let's say X% of people would buy something or the other. So you're able to upsell to a certain level.
Yes. The second thing that we try to do in the first month, we've not been able to crack it, is convert this transactional relationship into an actual relationship. Right now, with most online purchases, you know that it's a transaction, right? And because there's nobody who's met you face to face, there's no relationship which is established. Unlike the traditional way the insurance is sold, right? There's an agent who would know you through some relatives or friends and family, would come to your house, would understand what life stage you're at, would help you discuss your overall financial needs, and then pitch something to you, and that person would continue to attend family functions or be more of a friend than a sales agent, right?
Sure.
So we have to actually come close to that, and
Trust bar,
yeah.
that has to be crossed.
Yeah. So we still don't have all the answers, and we're trying to figure out ways and means to work around
Have
this.
you seen somebody do something which you really like, that this sounds great and I should consider this?
So there's one thing that we started to do is, we used to send policy pack. So after policy issuance, your document was sent online, and then a courier was sent to you as a physical copy. Now we've started to have a relationship manager for every customer, and then that person would go to your house, take appointment from you, and then deliver the policy pack to you
and
in
from
person.
A cost structure perspective, this is okay for you.
It's okay for us, because then again the larger objective is how do we convert this transaction into a relationship, and this person would then sit down with you and explain the nuances of the policy, right? So even for folks who are buying insurance online, I'd say 70 to 80 of them would not know all the nuances of that plan.
Absolutely.
They've bought it, but there are a lot of terms and conditions which are often unsaid. So then he would explain those fine prints to you, and all nitty-gritties and so on, and then hopefully he'll be able to assess you in your other financial planning needs.
Tell me something now, this whole expansion opportunity, so to speak, right? You said this whole intensity of the first 1 month to expand, but the investment as a company you'd be prepared to make would be somewhat proportional to the amount of room there is to expand. Now, when somebody's already bought, let's say, X amount of things, and I mean, your basket is not as huge as some of the other insurance players is, which means you have only so much to offer. So is there a conscious effort to also expand the offerings to be able to utilize that relationship better? Because what are you going to do with it eventually? There's only 3 things to sell.
Yeah, of course. So, about a couple of years back, we were only selling term insurance as the product on the website.
Expansion.
Now we have, let's say, 2 other strong savings product, one market linked and one guaranteed. So we now have 3 products that we offer, right? And we're trying to expand the bouquet. Of course, because we're still selling these products online, we have to ensure that they reach a certain scale and they're easy to understand for the users. As an organization, we would have, let's say, 15 or 20 different insurance plans.
In the D2C side, you have only so much, but otherwise, Max has a lot of things.
Yes. So yeah.
But it's a conscious choice to hold back those releases online, or
because you have to build buying journeys for each product.
Correct.
The communication that you would do for each of those products will depend on the features that they have. Your call center team needs to be trained on.
So it's a lot of operational work, which is then making into a path instead of. I mean, it's not a yes or no decision; it's a sequencing decision. When does everything come online? But let's say that this is not all there on the level 1 where there's lead gen happening or the call conversion happening, but it is at least in some form there in the cross sell and upsell side of things. The remaining products from the portfolio, the whole non-D2C portfolio, so to speak.
Not yet, because again. We are exploring omni-channel.
I was going to ask you, so could I be a customer for D2C for product 1 and this guy for product 2, and these 2 systems don't know each other? Is that currently possible?
I didn't understand your question.
So I'm saying if I'm a customer for, let's say, term insurance from the D2C platform where I bought this and completed my journey and got the policy document, I also have one more product from your overall business, which I bought via an agent or whatever route offline.
Correct.
And these 2 systems don't necessarily know that I'm the same guy.
The systems would be connected at the back end, but what would happen is the D2C journey would run their own cross sell, and the agent would run his own cross sell, right? So
at a business level, I mean, the agent would run his own cross sell, but agent would have, I mean, typically he's not only selling your products, he's selling everything else also, which means his cross sell play will end up being not necessarily in your favor.
There's something called as the customer ownership policy that we have, right? And which exists in most BFSI setups. So if the customer was acquired through the agency, they have the right to cross-sell to the customer.
They also have the right to cross-sell, but you also do.
Only they have the right to cross-sell to the customer.
Only they have the right to cross-sell.
If it's acquired through the agency. If it's
so an agency would mean a whole bunch of these offline
fleet on
insurance
street
agents, fleet on street, this, that, whatever, plus all these aggregators also, right?
Yes.
But when I bought an insurance from a CoverFox, I still get the renewal reminders from a Shriram or AXA or whatever. Does that work like that, or is this guy only supposed to do my renewals?
And now you've got the aggregator in between. Yeah. So aggregator is just another layer between the customer and the brand.
But you're not treating him as an agent, or are you treating him as an agent?
No. So in terms of a customer being acquired through the aggregator portal, the brand would continue to have their
Those
own
are renewals.
renewals
So
and communication.
Cross sells also potentially if you were to have it.
Yes.
But you're saying by the agent route, that ownership remains with the agent.
So, it's a blurred boundary.
Sure.
But yeah, I mean, the bigger understanding is that whichever channel is acquiring the customer, they own the customer, if not for the entire lifetime, at least for the first 6 months, 1 year.
So your
And
ability to cross sell everything to this guy who's acquired by an agent would suddenly open up at T plus 6 months.
Yes.
And then you'll want to make sure you maximize the relationship as well.
Yeah.
But very interesting to understand that, you're running the whole D2C piece, but there's a lot of tech adoption that will become a part of the larger insurance play as well. And I'm now curious to understand that in the whole cross-sell play, if you're not even cross-selling the remaining 15 products to your current acquired customers, is there a view on how does the whole tech transformation of this play looks like at the org level?
So, just to answer your question, we are trying to build digital cross-sell journeys, irrespective of where the customer was acquired from.
Sure.
And we want to make it as simple as possible. So, because we already know you, we have your information.
Sure.
Ideally, buying another product should be a couple of clicks for you at max, right? We'd want to build eventually what is called as the offer section for existing customers, where they come, they see, okay, this is what I've already bought. These are some other pre-approved products that are
goes, right? I mean, when you have an app on the guy's phone, then there's like he's coming to you frequently enough, hopefully for various reasons, and then you have all of those windows to cross-sell.
So these are some of the other offerings that are available, and you select which one is more relevant for you, and then go and make the payment.
Sure.
Now the attribution is something that the organization has to solve at the back end, right? It shouldn't become a barrier for the customer. So what we're trying to do is solve for the customer in terms of creating digital cross-sell and upsell journeys, and then we'll figure out how to manage which channel gets credit.
Reporting topics and not business impact. You still want to make business impact. But what would be very interesting to understand is you're running right now a 150 to 100 crore kind of scale of business on the D2C side of things, where you're dominantly acquiring new customers for 3 of these products, and there's some amount of cross-sell. I don't know, what's the contribution of cross-sells like if you're
10%. 10% of our overall business would be cross-sell, whereas for the offline channels, whether it's the agency or the bank, almost 40 to 50% of their business comes from existing customers.
And from a contribution to the overall business, the D2C contribution to the larger business, I'm assuming those are numbers that are shareable, right? What does that look like?
So e-com's contribution to overall Max Life in terms of customers, I'm talking about e-com, which includes aggregators as well, is close to 25%. So out of every 100 new customers acquired by the organization, 25 come from
how is this share changing
e-com
over the last few years? Is there
I'm
sure it's gaining share, right?
Yeah, it's been increasing, yes, because the e-com channel is growing faster than other channels.
And that would essentially mean more mandate and more resources and more kind of prioritization to getting more stuff into the e-com fold, right? Because if you're doing a more efficient job and getting a lot more data about the equation in, and also letting the ownership of the customer come back to the brand compared to the agent. Because while of course the agent is valuable to you, you don't want to completely leave out the option of eventually being able to cross-sell those guys. The agent also has a non-exclusive relationship, right? And you don't want to have an exclusive relationship on the reverse. So very interesting. So now, just in terms of the digital transformation journey of the entire Max Life group, how does the org look like? Because I'm sure this is like a dipping toes play where you've already scaled to a fairly decent level and you're doing 25% of the overall business digitally, but there's a lot more. And how does the org look like in terms of, and this is the same problem statement a lot of, I would imagine insurance companies, CMOs, CIOs, and CDOs for that matter would be considering. Okay, we need to go digital. We need to do a more comprehensive job on digital. A lot of them would have tried the marketplaces for sure. Some of them have also put in their D2C foot forward, and then people like you have run that show and kind of scaled to a certain level. But how does this ecosystem look like right now?
So I think most insurance players have now realized that e-com has to be a key focus area in terms of their future strategy. Most of them have still over-indexed on aggregators, and for them, e-com continues to mean the business that they're sourcing from aggregator, because the D2C play is long-term and it requires significant investments, not just on tools, on marketing, but also on people and processes. Right? So it's a long-term play. But now there are more brands which are jumping onto the bandwagon.
Would this get easier if the upfront investments was all SaaS? Because SaaS is a monthly subscription payment for the most part. So if somebody like a CoverStack, somebody like a WebEngage solves a big part of your technology infra problem, then should ideally make your
technology,
worship
yes.
easier.
There are tools that can solve the technology, but marketing would still continue to be
Of
expensive,
course.
right?
Yeah.
So, in terms of let's say our cost of acquisition, where we are today is because of the last 5 years or 6 years that we've invested, right? So we would have started at 2x of where we are, or even 3 or 4x of where we are today in terms of what it took to acquire one customer, right? So
your CACs have gotten more efficient with time, obviously.
significantly, and it wouldn't if you were to evaluate our business in isolation 4 years back or 5 years back, you'd say that this is not profitable, doesn't make sense, shut it down, right?
So what you're saying is, for the larger insurance companies which are used to doing business in a certain profitable, sensible, long-term fashion, it doesn't seem like D2C is a very effective channel simply because it's just expensive.
It's a loss-making channel.
At least for the first 3 years, it'll be
first
loss-making.
4 to 5 years, yes.
Ooh, which then raises the big question on why at all if you have to do it. But help me understand this. Now, when you had this question of spending aggressively on marketing, most of these are known brands. Max itself is a somewhat known brand. So isn't there a consumer expectation to find you online and be able to do business with you online and build that relationship online? There's a certain percentage of consumers who would be looking for this, right? So by not doing D2C, you're ultimately just sending all of that business to a CoverFox or an aggregator.
So a lot of brands have now created websites. They have created buying journeys, but they're not still investing in growing that business. Yeah. So while they've opened up that storefront,
so whatever comes organically comes, but we don't want to go more than that.
Correct.
And that's a conscious choice because the bid size is crazy. There's no point.
Correct.
Interesting. And is there a macro level trend that you think will change this? Because economically, the way VC funded aggregators will have money to burn on this acquisition, a traditional business will never see value.
Correct.
So what's been your stance? You've decided to grow here and you've invested and you've played that 4x CAC wala game also.
Yeah, so I mean, there were thanks to the senior leadership team at that point in time, about 4 or 5 years, they had that vision, that we have to invest in this business, and we have operated at obnoxious CACs for a few years.
Sure.
But when we look at the business in isolation today, it plays a significant contribution to not just to revenue or customers, but even to the bottom line of the organization.
Sure.
And
I would imagine whatever you're doing on digitally is not purely, I mean, while of course you attribute the cost to the digital CAC, but it will have a bearing on everything you're doing on the larger business as well.
You should be able to measure, as I mentioned earlier, you should be able to measure that your website is not just a gateway for acquiring online customers, it's a gateway for assisting a lot of your offline sales effort as well.
I remember you mentioned a lot of the agent-driven business also does homework online and they want to educate themselves better, and then they like a face to kind of get that trust part component short. So when you're saying the other bunch of people are doing the storefronts but not investing in that, they're at least covering the base in terms of the presence should be decent, well invested, because marketing money is not a problem. I mean, you're investing on all sorts of channels any which ways. I think one of the biggest advertisers on television and IPLs and all of that tend to be insurance companies because the headroom to grow the category is huge.
Correct.
And that's where if this becomes, let's say, more economically sensible to do this, might be making it easier.
Correct.
And from that perspective, the right kind of investments which are going to suit the online presence, and you spoke about education and category creation in a meaningful fashion, where you kind of pretty much going the media route where this is a neutral-ish kind of viewpoint on insurance advisory and buying decisions. Is that a pattern that you think will come from the larger industry players as well to invest on content and education? Because there's still room to sell a lot of people their first insurance product.
Yeah, so becoming the destination for advisory or neutral content on the industry is even a longer term play than creating a D2C business, right? A D2C business will still take 4 to 5 years and will start yielding results from the second year or the third year, right? Yeah. Whereas creating just thought leadership through content will look like charity to most.
Yeah, but that's kind of how brand investments also work, right? I mean, if it comes from a funnel-led kind of conversion-led approach in CACs, you will never see the math work out. But the guy is spending way more on advertising on TV, which you don't necessarily have a path to calculating the math on.
I think what I'm trying to say is that I believe the number of brands who would put their money behind this effort would be lower than compared to the ones who are wanting to be.
This might have to do with the current market share and the ambitions in the market share, because somebody will want to be more aggressive to grab more share of whatever new incoming folks.
Correct.
Very interesting, Sameer. This has been a very enlightening conversation for me to understand how you're currently operating. And while you've acknowledged that you're 5 on 10, I think from all the different people I've spoken to in the insurance industry, I don't think you're there. You're ahead of a lot of them. But of course, there is going to be always room to improve. Thank you so much for the conversation. Thanks for coming over.
Thanks so much. Lovely talking.
So well, that was an interesting conversation with Sameer, who leads the entire D2C business for Max Life Insurance. Some would think of that as a very traditional, very not so savvy business, but the amount of sophistication Sameer has brought to the table is quite fascinating. The nature of the business is such that they can actually afford fairly steep CACs, customer acquisition costs. At the same time, the funnel is quite sharp. So out of 100 people that come in, probably 20 fill up the form. And then downstream also, there's a much sharper customer conversion eventually. So that makes the problem more complex, but at the same time more interesting, because they're playing with a lot of content and trust elements and user-generated content elements to improve trust and improve the funnel overall. What's interesting is Max Life is pretty much ahead of the curve in terms of how they've invested and grown their D2C portfolio of businesses. They also have a very clear visibility on how it's going to scale out in future. But Sameer was pretty modest in terms of acknowledging that he's on a scale of 5 on 10 with respect to his own MarTech adoption aspirations. So that's great to hear. Hopefully, they move from 5 to 10 soon, and hopefully you guys too. So let's wish Sameer all the best with moving from 5 to 10 on his journey to MarTech adoption and maturity. I hope you found this useful and you're on track with your own journey to move from 5 to 10 on MarTech adoption and maturity. All the best.